Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, November 27th, the day before Thanksgiving. Anyways, I hope you guys have a wonderful Thanksgiving week. Again, this will be the last report for this week. Be off for the holiday week and will return next Monday. So stay tuned. Today we do got a lot of data to go over, so we're just gonna jump right into it. Because it's a holiday week, they kind of condense all the data that's supposed to be released into these last 2 days essentially, and today especially got the bulk of it. So the weekly jobless claims, which normally comes out on Thursday, is out today. We had 228,000 people apply for unemployment, according to last week's report. This week they were forecasting about 220,000, and it came in much lower at 213,000. So this is obviously good news that fewer people are applying for unemployment. Also, we had a stretch there for 2 weeks in a row that we were right in that 227, 228 range, which was kind of making us wonder if we've seen the bottom on this, and looks like we have not yet seen that yet. So it's obviously a good sign that the jobs are still looking pretty good. We got GDP revision. So the initial one came in at 1.9% for the third quarter. Forecast is supposed to remain the same, and it actually had a slight uptick to 2.1%. So investors are feeling pretty good about that. We'll get the final revision next month for Q3. And again, so far things are looking pretty rosy here. Durable goods orders. We were down in September by 1.4%. It was forecasting it down again at 1.1%, and actually went up 0.6%, which was a good sign, primarily because forecast that it was supposed to be in decline. A lot of this was attributed towards some fighter pilots or fighter planes and more defense contracts that came in. So that's one reason why it's up. But if you exclude the transportation, the big ticket items, it was not as bad. It was actually about the same. So it was down 0.4% back in September. Forecast calling for 0.1%, and it climbed up 0.6%. So overall, durable goods also showing some good signs here, which is a nice improvement. Chicago PMI, which is in contraction period, so it's below 50. Anything below 50 is contraction. We were way down to 43.2. However, it did improve a little bit to 46.3 in November. So this is the manufacturing in the Chicago region, which has been contraction mode for the past few months. And as we're seeing here, we got a slight improvement. So the bad news is that it's still below in contraction. The good news is that it's not as bad as it was the previous month. Personal income, we had a 0.3% increase in the month of September. Forecast was supposed to be another 0.3% increase in October, and we had basically no change in personal income. So that one's kind of a draw, unfortunately, pull back a little bit. However, on the consumer spending side of things, increased 0.2% in October. Forecast to be supposed to be the same pace at 0.2%, and increased even a little bit further at 0.3% in November. So this is obviously a very good sign here, especially heading in towards the holiday season, that perhaps consumers will be out spending with Black Friday sales, Cyber Monday, stuff like that will be coming up, and hopefully those will be entice consumers to spend even more. Now we get into the inflation data. We got the personal consumption expenditure. This is the headline number. We had 0%, no change basically in the month of September. Forecast was calling for 0.1%, and actually exceeded that a little bit by 0.2%. So the PCE basically remained at 1.3% year over year. And then when you get the strip out the food and energy, we get the core PCE, or real inflation, people. This is the Fed's favorite gauge, and this is what they base all their inflation data on, is the core PCE here. And like its counterpart, it was at 0% in September. Forecast called for 0.1%, and instead of going up 0.2%, it went up only 0.1%. However, its year over year dropped from 1.7 down to 1.6%. Now, this is important to note primarily because the Fed wants it at 2%, and as you can tell, it's gone the opposite direction. And it's especially after they had 3 rate cuts, that should stimulate the economy and actually push, at least help inflation, but it's actually went the opposite direction. So this is something they're going to be obviously keeping their eye on. It's been kind of stubborn. Fed Chair Powell mentioned a couple of days ago that inflation rates may remain low due to inflation, because they want to try to get that up to 2% level. And again, this is something we'll keep our eyes on. Pending home sales, it was up 1.5% from September month over month, and then in October it was down 1.7%. So we had a pullback on pending home sales, and now basically attribute that towards a lack of inventory, and then also we had a slightly higher rates in the month of October as well. So let's take a look here at the headline news here. Stocks are up right now. It's basically taking its cue from the data we received here. They're liking what they saw. There's very little news we're hearing now. Yesterday we heard some news about preliminary agreements between the U.S. and China on a phase one, but now it's been kind of quiet as to, so not much has been on that point. And so let's go see how this is affecting the bond market. Bond market's actually down a bit. We closed above the Fibonacci level and even kind of tested. We're kind of going up towards the other Fibonacci level, but today we actually dropped. We're off the lows, but we're down about 14 basis points, which will translate to pricing worsening a little bit from what we saw yesterday. So pricing won't be as good as what we saw yesterday. And the good thing about here is that we got a nice triple layer of support here. We got the 25, we got the 100-day, and we got the 50-day moving average. Floor below us. So if we do fall and touch off that, it should give us a pretty good strong support to bounce a little bit higher again. On the other side, we got the yields, and that's up about 1.76. It dropped below its 100-day moving or 50-day moving average yesterday, but today it kind of broke back above it. It's got a double ceiling up here with the Fibonacci level as well as the 100-day moving average, keeping a lid on it right now, and kind of the same boat. So heading into the long weekend, pricing is still pretty good, but again, not quite the same as it was yesterday, as the stock market is still continuing to hit highs. Now, that may wear off a little bit because right now you're seeing the U.S.-China agreement kind of priced into it, and right now they're going to, the investors going to look at and see, are we, review it basically, see is pricing where it should be or are they overpriced? So you're going to start seeing some of that. You could have some sentiment where it might pull back a little bit on the stock market, which could help us out later in mortgage-backed securities for interest rates. So stay tuned for that as well. So that could benefit us in mortgage in the near future. If you guys are looking to buy or refinance in located California, I'd love to talk to you guys. I am a loan officer with Pinnacle Home Loans. We do have quite a variety of different loan programs and provide a lot of different solutions for folks. We got better rates just like anyone else out there. If you'd like to talk, please reach out to me through either direct message or go ahead and email me. Those are the best two ways to reach me. Email is the best of those two, and I do respond a little bit quicker on the email versus direct message. Otherwise, you guys have a great rest of your day. Enjoy your long weekend. Happy Thanksgiving to you all. I hope you guys have a wonderful time and able to spend some time with your families and basically reflect on what we're all thankful for. And we'll see you guys on Monday. Take care. Bye-bye.